Hey everyone, welcome to today's deep dive. We're going to
Mhm.
be digging into VanEck's 10 crypto predictions for 2025.
Oh, yeah, they released this really interesting report. They even took a look back at how their predictions for 2024 actually panned out.
I know, right? It's like a scorecard for crypto predictions.
Exact.
Some of these predictions are pretty out there,
Oh, yeah.
like Bitcoin at $180,000,
Uh,
a US Bitcoin reserve, AI agents becoming like social media stars. I'm really curious to hear what you think.
let's jump in.
But first, full disclosure, VanEck's an investment manager, which means they could have skin in the game.
Hmm.
They might have money invested in these very assets, so
Right.
got to keep that in mind. This isn't financial advice. We're just exploring ideas here.
Absolutely.
So with that said, let's start by looking at how they did with their 2024 predictions.
Sounds good.
They gave themselves an 8.5 out of 15. Not bad, considering Bitcoin and Ethereum kind of blew past their price targets. What stood out to you in that review?
Well, I think it's interesting that even some of the predictions they missed on were actually bullish for the market. Like they predicted the Bitcoin halving would go off without a hitch, which it did.
Right. Smooth sailing.
And they also foresaw Bitcoin hitting all-time highs in Q4, which also happened. It just happened a lot earlier than they expected.
Yeah, I don't think anyone saw that coming.
Yeah.
This bull run has been pretty wild. And speaking of bull runs, their first prediction for 2025 is that we're going to see a crypto market peak in Q1. They say Bitcoin could reach $180,000 and Ethereum could soar above $6,000. Other coins like Solana and Sui are expected to hit new highs as well. But here's the catch. They're also predicting a major correction after that peak.
Oh, wow.
They're saying Bitcoin could drop 30% and altcoins could see even steeper declines, like 60%.
Yeah.
So what are the red flags? What should we be watching for to see if the market is overheating?
VanEck lays out 5 key indicators that they're using to gauge just how exuberant the market is getting. The first one is funding rates. If traders are willing to pay like ridiculously high rates, like 10% or more for months, just to borrow Bitcoin and bet on it going up, that's a big warning sign.
So basically, when borrowing costs get crazy high, that's when we should start getting a little nervous.
Yeah, exactly. The second indicator is unrealized profits.
Okay.
If you've got a ton of Bitcoin holders sitting on massive gains, it could be a sign that things are getting a little too complacent, and that could set the stage for a sell-off.
So when everyone's feeling super confident, that's when we should start getting cautious.
Right, it's kind of counterintuitive.
Yeah, it is.
The third indicator they use is the market cap to realized value ratio. It's also called the MBRV.
Okay, MVRV.
Basically, when that ratio climbs above 5, it means that Bitcoin is trading way above its historical average purchase price. And that kind of disconnect could indicate a bubble forming.
Got it. So we're looking for historical comparisons to gauge whether things are getting out of hand. What's the fourth signal?
The fourth one is Bitcoin's dominance. If its share of the total crypto market dips below 40%, it suggests that money is flowing into riskier altcoins.
Oh, I see. So when Bitcoin starts losing ground to the smaller, more speculative coins, that's when we need to be extra careful. What's the fifth signal?
Well, this one is a bit more anecdotal, but I think we've all experienced it at some point. It's what they call the mainstream speculation signal. Basically, it's when you start getting bombarded with texts from friends and family who don't know the first thing about crypto.
Oh, no.
Asking you about the next big coin to buy, that's a pretty good sign that things might be getting a little out of control. Remember the whole Dogecoin craze?
Oh, I definitely remember that. My grandma was asking me about Dogecoin. It was wild.
Yeah, that's a classic example.
Okay, so those are the warning signs for a potential market peak and correction.
Right.
But prediction number 2 is where things get really interesting. VanEck thinks the U.S. is actually going to embrace Bitcoin
Really?
as a strategic asset, maybe even creating a Bitcoin reserve. They specifically mention Pennsylvania, Florida, or Texas as potential leaders in this.
Ugh.
How realistic do you think this is? It seems like a pretty radical move for the U.S. government.
Yeah, it's a bold prediction, but VanEck does make some interesting points. They highlight how the Trump administration has recently appointed some pretty crypto-friendly leaders to key positions.
Like who?
Well, for example, J.D. Vance is the vice president, and Michael Waltz is the national security advisor.
Wow, that does seem like a significant shift in the political landscape.
Yeah.
Could that really pave the way for a U.S. Bitcoin reserve?
Well, VanEck thinks so. They believe this administration could push for the approval of spot crypto ETPs, which would make it easier for institutional investors to get involved.
Okay.
They could also potentially repeal the SEC's controversial rule SAB 121 that restricted banks from directly holding crypto.
Right.
And they might even encourage more Bitcoin mining in the US to, boost the country's position in the global crypto scene.
So they're basically saying that this new administration could create a much friendlier regulatory environment for crypto in the U.S.
Exactly.
But they also take it a step further,
They
right?
do.
They predict that U.S. companies could accumulate so much Bitcoin that their holdings could actually exceed Satoshi Nakamoto's stash of 1.1 million Bitcoin.
Wow.
What do you think about that? Could we see a world where U.S. corporations control a significant portion of the Bitcoin supply?
It's definitely a possibility. If you connect this to the bigger picture, it suggests that Bitcoin is gaining recognition as a strategic asset, not just for individuals, but for institutions and even governments. And this growing mainstream adoption could have a big impact on Bitcoin's price in the long run.
Yeah, it's not just about speculation anymore. Okay, let's move on to prediction number 3, which is all about tokenized securities. VanEck believes the value of these tokenized securities will explode to over $50 billion in 2025. Currently, the market's sitting at around $12 billion, with most of that being tokenized private credit. Think platforms like Figure and their Provenance blockchain, but they see this expanding to public chains as well. What are the potential implications of bringing tokenized stocks and bonds to the masses?
Well, what's exciting about this is the efficiency and transparency that blockchain brings to the table.
Right.
Imagine a world where you can trade stocks 24/7 with instant settlement and much lower fees than traditional brokerages. That's the promise of tokenized securities.
And VanEck thinks institutions like the DTCC, the clearinghouse for traditional securities, will step in and help make it possible for these assets to move smoothly between public and private blockchains. They even have a wildcard bet, Coinbase tokenizing its own stock on its base blockchain. That would be huge.
It would. It would really signal a coming together of traditional finance and the crypto world, and that could really accelerate mainstream adoption.
For sure. All right, prediction number 4 focuses on stablecoins. VanEck predicts daily settlement volumes will reach a mind-blowing $300 billion, fueled by adoption from big tech and payment companies. They even think U.S.-Mexico stablecoin transfers could increase 5-fold. What kind of impact could this mainstreaming of stablecoins have?
Well, stablecoins are kind of like this bridge between the traditional financial system and the crypto world.
Yeah.
They provide a way to use the benefits of blockchain, like speed and low cost, without the volatility that comes with, something like Bitcoin. Think of them as like the on-ramp to a more inclusive global financial system.
I like that, the on-ramp. And that's especially true for remittances, right? People sending money across borders to support their families.
Absolutely.
Stablecoins can make those transfers much faster and cheaper than traditional methods.
Exactly. They cut out the middlemen and reduce all that friction in the system, which is huge for people who rely on remittances.
Okay, prediction number 5 takes us into the world of AI.
Oh, here we go.
Always gets me thinking about the future. VanEck thinks on-chain AI agents will surpass 1 million in 2025.
Wow.
These agents are essentially specialized bots designed to, optimize certain outcomes, like, for example, maximizing yield in DeFi.
Right.
But here's the crazy part. They're already becoming social media influencers on platforms like X, formerly known as Twitter. I gotta ask, is this prediction a little out there? Are we really going to be following AI influencers?
It's definitely ambitious, but if you look at what's already happening, it's not that far-fetched. We've got AI agents like Bixby and Terminal of Truths building huge followings on X, so the potential is there.
It is wild to think about AI agents evolving beyond just finance. Could they become our personal assistants, gaming buddies, even virtual companions? It's exciting, but maybe a little scary too.
It definitely raises some questions about the role of AI in our future relationships.
Prediction number 6 dives into Bitcoin Layer 2s, L2s for short. These are scaling solutions that basically supercharge Bitcoin's functionality. VanEck predicts they'll reach 100,000 Bitcoin in total value locked, or TVL, by 2025. We're already seeing huge growth, with TVL over 30,000 Bitcoin this year. Do you think this momentum can continue, and what makes these L2s so important for Bitcoin?
Well, Bitcoin L2s are designed to overcome some of the limitations of the Bitcoin base layers.
Okay.
Things like slow transaction speeds and the lack of smart contract functionality. That makes them much more attractive for developers who are building decentralized apps, especially in the DeFi space.
So could we see a shift from wrapped or bridged Bitcoin, which are the main ways to use Bitcoin in DeFi right now, to these L2 solutions?
That's exactly what VanEck is anticipating.
Interesting.
They believe this shift could transform Bitcoin from primarily a store of value to a more active participant in these decentralized ecosystems.
Okay, prediction number 7 gets a little technical. VanEck predicts that Ethereum's blob space, which is a data layer for L2s, will generate $1 billion in fees by 2025.
Okay.
I know this sounds complicated, but it's a crucial part of how Ethereum plans to scale. Basically, L2s send a compressed history of their transactions to Ethereum through this blob space, and they pay fees for that in Ether. The concern is that L2s are sending very little value back to Ethereum's mainnet right now.
Right.
Do you think blob space can really become this massive revenue stream for Ethereum?
Well, VanEck's argument rests on three main points. First, they expect L2 adoption to just explode, which will increase transaction volume and, as a result, the demand for blob space. Second, they anticipate optimizations to rollups that will make it cheaper and more efficient for L2s to use blob space.
So it's not just about more transactions, but about making the system itself more attractive.
Exactly. And the third point is the introduction of what they call high-fee use cases, things like enterprise applications and tokenized real-world assets. These applications require higher security, and they're willing to pay a premium for it, which would drive up those blob space fees.
Okay, so those are the 3 pillars of their blob space revenue prediction. Now let's talk about prediction number 8, which focuses on DeFi reaching new heights. They're projecting DX trading volumes to exceed $4 trillion, with total value locked surpassing $200 billion. What's interesting is that while DX trading is booming, DeFi TVL is still below its all-time high. What does VanEck's see as the driving forces behind this predicted DeFi resurgence?
Well, they point to several factors. They say the emergence of AI-related tokens, new consumer-facing dApps, and the influx of tokenized securities and high-value assets into the DeFi space are all contributing.
There's like a perfect storm of innovation and adoption.
Exactly. It's about expanding the use cases for DeFi and making it more accessible to a wider audience.
Prediction number 9 is all about the NFT market, which has definitely seen better days. VanEck is calling for a recovery, with trading volumes reaching $30 billion in 2025. The bear market hit NFTs pretty hard, with volumes plummeting from their peak. But VanEck points to some standout projects like Pudgy Penguins, Miladies, and BAYC that have actually managed to grow their cultural relevance during this downturn. What factors do they see driving this NFT comeback? Is it just about people wanting to own a piece of internet history?
Well, VanEck believes that as crypto wealth rebounds, newly affluent users will start diversifying into NFTs, not just as speculative assets, but as items with lasting cultural and historical significance.
So it's about more than just flipping JPEGs for a quick profit. It's about owning a piece of digital history.
Exactly. And established collections like CryptoPunks and BAYC, despite their price drops, are well positioned to benefit from this shift. They have that strong brand recognition and cultural cachet.
And they're still betting on Ethereum as the dominant platform for NFTs, predicting it will account for 85% of NFT trading by 2025.
Right. Ethereum's first mover advantage and the size of its NFT ecosystem are pretty hard to beat.
Okay, we've reached the final prediction, number 10.
Huh.
This one focuses on dApp tokens, the tokens that power decentralized applications. VanEck predicts they will close the performance gap with Layer 1 tokens, which have significantly outperformed them in this recent bull market. What's their reasoning behind this prediction? Will dApp tokens finally have their moment in the sun?
Well, they believe a wave of new innovative dApps will launch in late 2024 and 2025, particularly in areas like AI and DePIN, which stands for Decentralized Physical Infrastructure Networks.
Okay.
They think these cutting-edge dApps could drive significant value to their respective tokens, making them more attractive to investors.
So it's all about the utility and the real-world applications that these dApps offer. If they can solve real problems and create real value, then their tokens are more likely to appreciate.
That's the key. When dApps demonstrate real value, their tokens usually reflect that success.
Well, there you have it. VanEck's 10 bold predictions for the crypto world in 2025. It's a lot to digest, from Bitcoin hitting those astronomical prices to the rise of AI agents and the U.S. potentially embracing Bitcoin. What stood out to you the most from this first batch of predictions?
I think the potential for a U.S. Bitcoin reserve is really intriguing. The implications that could have for the global financial system are huge. It's a bold prediction, but not totally out of the realm of possibility given the recent political shifts we've seen in the U.S.
Yeah, and I'm fascinated by the idea of AI agents becoming more integrated into our lives. It's a little unsettling, but also incredibly exciting to think about how AI could reshape our interactions and experiences.
We're just scratching the surface of what's possible with crypto and AI.
It's going to be a wild ride.
Absolutely.